Stanley Drukenmiller is what happens when intelligence meets ruthless discipline. Raised in a modest household in Pittsburgh, Drukenmiller learned early the value of responsibility, preparation, and delayed gratification. He wasn't born into capital or connections. He built his edge through relentless study and obsession with understanding how economies actually work. He studied economics, not to sound smart, but to understand cause and effect. That mindset would later define his dominance in global markets. In his 20s, Drukenmiller launched Duquesne Capital with just a few $1,000,000. Over the next 3 decades, he delivered an almost unimaginable record, over 30% annualized returns with no losing years, not once. That level of consistency places him in a category almost no one else occupies. But Drukenmiller's legend was cemented in 1992, when he partnered with George Soros in the famous trade against the British pound. While most investors hesitated, Drukenmiller identified a structural flaw in the UK's currency policy. He pressed the trade aggressively, shorting billions of pounds. The Bank of England broke. The trade reportedly generated over $1 billion in profit in a single day. That wasn't gambling. That was conviction built on deep macro understanding. Drukenmiller's greatest strength was his ability to size aggressively when the odds were overwhelmingly in his favor, and stay small when they weren't. He believed diversification was protection against ignorance. When he had clarity, he concentrated. But here's the discipline most people miss. He also cut losses fast and without hesitation. Drukenmiller famously said that the goal isn't to be right, it's to make money. If a thesis broke, he exited immediately. No ego, no hope, no attachment. One of his rare missteps came during the tech bubble era when he briefly got caught fighting momentum instead of respecting it. He learned quickly that markets can remain irrational longer than logic expects, and adjusted his behavior instead of defending his pride. His habits were simple but brutal in execution. He studied relentlessly. He followed liquidity and central banks obsessively. He respected price above opinion. He pressed only when conviction was extreme. He protected capital with religious discipline. Drukenmiller never confused activity with productivity. He waited patiently for asymmetric opportunities, moments when risk was limited and upside was enormous. And when those moments arrived, he acted decisively. But perhaps his greatest habit was psychological clarity. He didn't need constant action. He didn't chase headlines. He didn't seek validation. His identity was not tied to daily P&L. His ego stayed small while his discipline stayed massive. That allowed him to remain consistent in environments where most traders self-destruct emotionally. Eventually, Drukenmiller stepped away from managing outside capital, not because he failed, but because he valued freedom more than accumulation. He had already won the game. His legacy isn't just the money, it's the mindset. Stanley Drukenmiller proves that real wealth is built through patience, precision, and relentless risk control. That conviction matters, but only when paired with humility. That the best traders don't predict, they adapt. And above all, that the market rewards those who respect it, not those who try to dominate it.